What if I told you that AI is already making millions in the stock market while most traders struggle? Hedge funds have access to advanced machine learning models that predict price movements with insane accuracy. But how do they do it? Today, I'm revealing the AI strategies hedge funds don't want you to know. AI-driven trading is no longer a futuristic dream, it's happening now. From sentiment analysis to neural networks, hedge funds are using cutting-edge technology to outsmart retail traders. The good news? You can understand and apply some of these strategies too. By the end of this video, you'll have a clear roadmap to leverage AI in your own trading journey. Why hedge funds rely on AI for trading? AI has completely revolutionized for trading by eliminating human emotions and basing decisions purely on data. Here's why hedge funds prefer AI over human traders. AI processes millions of data points in seconds. It detects hidden patterns that humans often overlook. It executes trades in milliseconds, capitalizing on micro changes in price. AI never gets tired, emotional, or distracted. Pure logic-based decisions. Example: Renaissance Technologies, one of the most profitable hedge funds, uses AI-powered trading models to generate billions in profits. Their strategies are fully automated and run 24/7. Two key AI strategies hedge funds use: sentiment analysis, trading based on market emotion. AI scans news articles, financial reports, tweets, and even Reddit discussions to analyze public sentiment. It detects whether the market is bullish or bearish and adjusts trading decisions accordingly. Example: Elon Musk tweets about Dogecoin. AI detects hype, executes buy orders before humans react. High-frequency trading, HFT, speed wins the market. AI-driven HFT algorithms place thousands of trades in milliseconds. These algorithms detect tiny price inefficiencies before retail traders even notice them. Example: an AI model might spot a 0.001% arbitrage opportunity between exchanges and profit instantly. Neural networks and deep learning predicting future prices. Hedge funds train AI models on decades of stock market data to predict high future price movements. These models adjust based on UI real-time market changes, constantly learning and improving. Example: a hedge fund's AI might notice that stocks tend to rise 2% after a specific Fed announcement and trade accordingly. AI-based portfolio optimization, the smartest diversification strategy. AI optimizes hedge fund portfolios by balancing risk versus reward dynamically. It analyzes thousands of assets and recommends an optimal portfolio mix based on market conditions. Example: AI detects rising inflation, allocates more funds into commodities and inflation-resistant assets. Fun fact: many hedge funds use AI-powered robo-advisors that make investment decisions without any human involvement. Can retail traders use these AI strategies? Good news: you don't need millions of dollars to use AI in trading. Here's how you can leverage AI today. AI-powered trading bots. Platforms like High Trade Ideas, Tickeron, and Alpaca. AI. Let you automate trades using AI. Sentiment analysis tools. Use AI tools like FinViz and DataMiner to scan news and Twitter sentiment. Machine learning for backtesting. You can build your own ML model to test strategies before risking real money. Want a full guide on how to use these AI trading tools? Let me know in the comments. Call to action. What next? So, do you think AI will replace human traders? Let me know your thoughts in the comments. If you want to learn how to build your own AI-powered trading bot, check out my next video. Don't forget to like, subscribe, and hit the bell for more AI and trading insights.